Mad Money's Jim Cramer is back at the desk. He's co-founder of TheStreet and author of How to Make Money in Any Market. Jim, great to have you back.
Oh, look, I do miss TheStreet, and I think you do a fabulous job.
Well, we love when you join us,
you.
and today we're putting your playbook to the test in this market.
Sure.
But before we
Great
talk about
idea.
making money in
Great
this
idea.
market,
Okay.
I want to get a vibe check from you in terms of how you're thinking about the market, because we have stocks near all-time highs, yet
Right.
there's tension in the Middle East that seems to escalate
Right.
on a daily basis. We have oil above 90. We have a Fed chair that could be uncertain. It doesn't really seem like the backdrop that's supportive of stocks.
No, it doesn't.
Help
But
us
here's
make
the way-
sense.
Well, let me tell you, I look at it. I'm a creature of the bond market. I learned this during my first week at Goldman Sachs when I was kicked out of the office when I was asked about what I was thinking about the market. I just literally was, get out of here. And the reason why was that I didn't start by saying, you know what, the bond market is stable. The bond market is tame. The much bigger bond market is giving us our clues. This bond market has done nothing, even with oil when it spiked to 100. It just doesn't, 105. The bond market gives you the license to buy what you want. And
So
that's what I'm
what is the
doing.
bond market actually signaling then?
Signaling low inflation. It's signaling that we're going to have a Fed that's going to ease. It's signaling that whatever you see that is up in price too much is going to come down, and therefore stocks are a great buy.
Yet stocks are at all-time highs right now. So
okay.
if for someone that's listening and they're sitting in cash right now because
Right.
maybe they missed out, is it time to buy the breakout or is it time to be patient?
Well, first of all, I'm sorry that they didn't catch it because we've been pretty constructive, but I would say that you have to buy the little dips that you get, or the little dips that you of the stocks that you might want, because there's been rotations where stocks have gotten hit, of which there's some very good stocks.
What's an example?
Like pharma right now, J&J is fantastic. Cardinal Health is down as if it's a bad company. That's ridiculous. Merck has retreated it all the way. I even think, frankly, I know it's probably, some people feel it's late, but Eli Lilly will work here because I think the pill form numbers are going to be very good. But Johnson & Johnson was my favorite.
If you're already invested, is it time to trim or is there still a lot of room to run?
You might want to trim and then get into something else, because I think that, again, part of the rotation is just gifts. They just give you these gifts and you got to take them. You can't just say, I don't like the market. You have to do it case by case because there's so much opportunity.
So give me an example of an area in this market that would be good to trim right now, given the run-up that we've seen, and
Sure.
another area outside of pharma that might
I want
be a
to sell
gift.
the oils, except for Chevron, because Chevron's got a good yield. But those have had, if you've noticed, they don't go up that much anymore when oil goes up. They're like at their last breath. So I think that you can rotate out of those and rotate out of the refiners. I don't think, and these are where people have made a lot of money, but I think it's time to move on. I don't really like gold at all. Now, gold can be a fundamental part of your portfolio, but I don't like it for a trade. Even Agnico Eagle and Newmont, I just think that gold is way overplayed. So is silver. So is uranium, for that matter, except for some. And I don't think that people should be buying rockets. SpaceX is coming. That's all you need. I also don't think that people should be going nuts for interest rate plays until we get closer to WARSH being improved.
Okay, so outside of pharma, where should that money that you're trimming be put to work?
Okay, I still believe in the data center passionately, okay? And I can break down everything in the data center I really, really like.
What? Break it down.
Okay.
We want all your
First,
best ideas.
I want memory, so I want Seagate, I want Western Digital, I want SanDisk, and I want Micron.
At these levels still?
Oh, absolutely.
Okay.
But you buy small and then you wait, okay? I mean, for instance, today, and you'll have some of these rotate down. I mean, Western Digital will be down, and you may want to buy a little. Don't buy all at once. I mean, Micron, when they reported, the stock got hit last time.
Sure.
Maybe it gets hit again. It wouldn't shock me. I really, I like semis very much. I still think NVIDIA can be bought, believe it or not. AMD can be bought, but not big. Marvell can be bought, but not big. I like networking, which means I like Ciena. I like Arista Networks. I like fiber, which means I like Lumentum. And I really love Corning. I think Corning's terrific. And to the point where I think that could go to $200. So we have a lot of companies like the Coherent is really, really great. These are all laser within the data center, and you got to go to the data. You can even do CoreWeave. which is a data center builder. Or look, Vertiv. Vertiv is down on its quarter, but it was really a beautiful quarter. So the reason why I'm in favor of the data center, I know everyone would think I'm late, and I've liked them all along, to be fair to me, but we're in the fourth industrial revolution. In the fourth industrial revolution, we're still at the stage where we're even trying to convince people it's happening. All of those stocks are integral to the industrial revolution. They're part of what Jensen Huang, the CEO of NVIDIA, would say is the power layer and the network layer. If you want power layer, there's no better stock than GE Vernova, which just reported an amazing quarter, but is so not done. I mean, it is just the only game in town when it comes to providing power to the data center.
Are there any that are actually a good value right now, though?
Because you mean value like down, like
cheap enough to actually buy? Because it's hard.
ARM Holdings.
Okay.
ARM Holdings, because ARM Holdings has introduced a CPU. The CPU is the basic building block. It's what's in your PC. People don't realize there's this new agentic part of the fourth industrial revolution where you have agents doing things that are programmed by artificial intelligence. They need CPUs. So you've had there's only 3 CPU companies. There's AMD, there's Intel, which is also still alive, but then there's ARM Holdings. ARM just got into the business, and it doesn't even reflect that they've gotten into it. So ARM represents real value.
Okay, you mentioned NVIDIA, but you've been calling for the breakup of the Mag 7. Which of the Mag 7 still deserve the magnificent title, and which are crowded trades?
Okay, well, a lot of them have come back to life.
Most recently,
my travel just doesn't own Tesla, if only just because a lot of the good stuff at Tesla is buried within an auto company, and I don't think the auto business is that good. From best to worst, okay, NVIDIA stuck at 200. It hasn't gone up, and yet all the real excitement is when these companies buy NVIDIA chips, and they all have NVIDIA chips. I'm looking at a situation where you can buy Google's chips, not nearly as powerful, unwilling to be benchmarked. You can buy AWS, Amazon chips, but they're nowhere near as good as NVIDIA, which have much greater power and can do much more. So that would be number one. Then number two is still Alphabet, Google, which is doing incredibly well, but it's not. Remember, you're buying YouTube, you're buying Google Cloud Services, which is just talking now about how great things are going, and you're buying Search, which is absolutely terrific. You're buying Waymo, which is great. I mean, these are all fantastic properties, and they're all within one. All within one.
All right.
shell.
So for the sake of time, NVIDIA,
Alphabet.
I like this, what's
though.
number 3?
Then Amazon. Because Amazon is just now getting credit for Amazon Web Services getting hotter. Look, I would have put Apple up top, but I gotta get to know this new guy, and I don't know him. I know Tim Cook really well, but I don't know this fella. Meta is he's just now got a new form factor mark, but it's not as good. It's very inexpensive.
So what comes in at number 4? Meta or Apple?
Apple. And then Meta. And then, you've got,
Microsoft and Tesla.
Those are tough. Okay, so let's talk Microsoft. Microsoft may actually represent value, and that's because they have so much cash, and they have Copilot, which is not that good, but they could go make an acquisition or two. I mean, I just saw one of that is not a Mag 7, SpaceX, go buy a product called Cursor, which all the young people write that's how they write their programs on, and I think that's a great deal, even if it's $60 billion. That's just a great idea, and so they're willing to take bold action. I will like Anthropic because it's business, it's an enterprise, and I might like OpenAI when that comes public. So OpenAI, SpaceX, and Anthropic would be very exciting deals.
Just quickly, what's a software name that you would buy right here that you don't think will be as disrupted as some of the others?
That won't be disrupted. Caterpillar won't be disrupted. Nucor won't be disrupted.
A software name?
Oh, I'm sorry, software. I thought. Oh,
I was like, wait, are we
software?
recalibrating?
They're all vulnerable.
So there's not a clear buy here, given the pullback that we've seen.
Vulnerable.
Okay.
ServiceNow is vulnerable. They report. Salesforce, great company, report. Microsoft is a hybrid company, but the part that can be duplicated is problematic. Adobe, no.
We've spent a lot of time talking about tech, but we've also seen this rotation into other names. We have names like Costco and Walmart that are actually pretty close to highs as well.
Yes.
How should investors be thinking about rotation?
Well, those are
and
inflation plays. I mean, the consumer's not that strong. So you buy TJX, you buy Costco, you buy Five Below, you buy Dollar General, and you buy Walmart. And you can buy any one of those or any combination of those. You can pick two of them. We, for the Chapel Trust, have picked TJX, which has been a monster winner. We've owned Costco, I don't even know, maybe for 15
That's where
years.
you get your gold bars. So
I love
before we
Costco.
get to our rapid fire round of this or that, which I know you've played with us before, we do have a few audience questions that I want to get to.
Absolutely.
And for the sake of time, we'll have to keep these pretty rapid fire as
fine.
well. Bruce says any sectors you'd avoid right here.
I'd avoid gold, and I would avoid oil.
Okay, Julian, AI demand is there, but how on earth is it going to be monetized fast enough?
Okay, that's a really great question, and I think that you have to wait till 2027, 2028 when you see a really good return for everything that they put in, everything.
Tim, are factor ETFs a good set it and forget it strategy?
No, Tim, don't do ETFs, pick stocks, give me a break.
Because of fees?
I just think go in the S&P 500.
Okay.
Period. End of story. Okay.
Rebecca says, where are the best buying opportunities? You've given a lot, but one name that you haven't given yet.
Okay, Rebecca. Corning, the fundament of the data center is no longer going to be copper. It's going to be fiber. And the only maker of fiber that's good enough is Corning. Can you imagine that? Having one?
All right. Aaron says, best and safest healthcare stocks that have potential psychedelic breakthroughs.
Okay, psychedelic. I had one on the other day. These are too speculative for me. Johnson & Johnson has the thing called Spravato, which kind of has that, and it is very, very good.
But that's not too speculative for you. What's the one
that's AAA balance sheet and
okay.
really inexpensive stock.
Okay.
I think everyone should buy J&J. It's core position.
Okay. And of course, because there will always be people who comment, inverse Cramer. I have to ask you. I mean, I do think
Did they buy? I guess they shorted. Did they short Nvidia $2? Did they short Apple at $5?
And from my understanding, the inverse Cramer ETF actually shut down because it couldn't keep up with your winners.
Money. I mean, my wife asked about inverse Cramer, and I said, I don't read anything about me. I haven't in 5 years now, and my life has been much better.
But aside from Nvidia, what's one recent call that proves the crowd is wrong? That crowd.
Oh, okay. My Cardinal Health. I'm quite surprised how bad it's been. It's not devastating or anything. Cardinal Health and Nike are my two bad ones. I don't think, I'm not sure Nike can come back as fast as I'd like. And Cardinal Health is just a buy. I refuse to believe I'm wrong. I just refuse to believe it. But I am wrong so far. Big wrong.
All right.
Big wrong.
Time for our rapid fire game of this or that.
Let's do that.
Quick questions, quick answers.
Absolutely.
You know a thing or two about lightning rounds. You ready?
That's born ready.
All right. This rally, broadening out or running on fumes?
Running on fumes.
Buy the breakout or wait?
Wait.
Stock pickers market or just buy the index?
Stock pickers.
Take profits or let your winners run?
Let your winners run.
Small, mid, or large caps?
Only large.
S&P, cap weighted or equal weight?
Cap.
Mag 7, still leadership or crowded trade?
Absolute leadership.
Mag 7 or the rest of the market?
Mag 7.
AI chips or AI power?
AI chips.
Nvidia, buy or trim here?
What, out of your mind? Never, don't. Nvidia's own, don't trade.
More upside, Walmart or Target?
Ooh, very tough because Target's really running here, but still winning Walmart.
Better buy after earnings, RTX or GE Vernova?
Oh my God, GE Vernova because it doesn't have any near-term war risk.
GE Vernova or Boeing?
Love Boeing.
Better airline stock, United or Delta?
You kidding? Ooh, jeez. Delta's a better run company. Let's go with Delta.
Okay. But you probably fly United, right?
Well, because I live in New Jersey.
Yes. Better healthcare bet, CVS or United Health?
United Health, that was an amazing quarter.
Is United Health still a buy here, yes or no?
500.
Luxury bet, Hermes or Ferrari?
A Ferrari. Hermes had a really big quarter.
Ferrari or Kering?
Kering had a really big quarter. Go with Ferrari.
Berkshire without Buffett or Apple without Cook?
Oh my God. Apple without Cook.
One speculative name you like right now?
BWXT. Uranium.
BWXT.
Yeah, uranium.
Retail investor right now, underexposed or overconfident?
Underexposed.
More promising IPO, Anthropic or OpenAI?
Anthropic.
Anthropic or SpaceX?
SpaceX.
Rate cuts, bullish catalyst or sign something's breaking?
Super bullish.
One word to describe how you're feeling about the market for the rest of 2026.
Sanguine.
Jim Cramer, always a pleasure. We should note, for those people who haven't read your book yet, there's an opportunity to actually get a signed copy. How do we do that?
Okay, you just become a member of CBC Investing Club, and there's a nice discount right now if you join. Everybody loves it, so what can I say? It's been a labor of love for 20 years, and people get a kick out of it, but to get a signed book right
And I should say, I actually have my signed
there
copy
you go.
here.
Well, you're terrific.
But I listened to the audio version, and you read it to me, so that was great as well.
Yeah, I ruined a lot of Saturdays and Sundays. I didn't get to harvest my garden. The garden was my 37th annual garden.
Well, there's always this season.
Oh my God, is there ever?
Jim,
well, you are a
thank
pleasure, and I do miss the street, but that's okay.
We love that you come back and say hi from time to time, and thank you for helping us make money in this market.
You're terrific. Thank you.
That's Jim Cramer. Want more Cramer? My last interview with Jim dives into his investing playbook and the exact strategy he uses to find breakout stocks. Check it out.